Morning.
G'day, Gav. Welcome back, mate.
Yeah, it's been a solid couple of weeks away, flying paragliders and competitions. It's been fun.
Yeah, fantastic. Well, the market certainly remained active while you're away, and right now we're in the middle of a bit of volatility.
Hey, it's a bit hard not to watch what the market's doing while you're away as well. So I've come back to the market jumping all over the place, particularly oil.
Yeah, definitely have. Yeah, yeah. Look, the oil thing, and obviously the war in Iran's been a huge market turning point. Our market's down probably 500 points from where we were trading. Obviously, all on the back of the spike in oil price. I don't think the actual war component in Iran was something that worried our markets as such, but once that oil price started to move and it became obvious Iran was going to try and sabotage oil flow, that really put some fear through markets.
Yeah, well, oil and general other commodities that flow through there as well, natural gas and all the likes of it. So it's certainly put a shock through all sorts of things that flow on from that, like potential for interest rates and input costs and all those sort of things. So it's bit of uncertainty sort of flowing through everywhere at the moment.
Yeah, definitely, definitely. I mean, it's not like we haven't seen oil over $100 a barrel before, but I think the fear of supply chain is the biggest concern.
Yeah, I agree. Like it impacts all over the place. So it's certainly something to watch.
Yes. All right, well, let's
I
get in
find
and
the
have a talk
right
about what's been going on.
right presentation here. So I think it would be worth having a quick look at PEs and how they're
Yep.
tracking in the market at the moment. So I'll just try and bring that up on the screen here at the moment, and we can have a look at what they're doing. So I quickly put together a table that shows PEs from all around the globe and their averages.
Yes.
Right is still relatively high.
Yeah, the Australian market I thought would have been a little bit cheaper on its sort of average price earnings multiple, but yeah, we're still trading above our average. Dividend yield is probably not unattractive in current rates environment, but um, I would probably suggest if you looked at it at a long-term basis, you'd say that maybe our market's a little bit expensive at the moment, but with rates generally running on a lower sort of level than we've probably historically seen, yeah, maybe that is justifiable. That P, the dividend yield level at 3.7.
Yeah, I think if you also look at pockets of the market, you're going to get much better dividend yield than that. That's average as a whole. I think there are some pockets there that are you're going to get a much better dividend yield than what you do having your money in the bank as well. I think the American market's the interesting one. The Dow Jones sort of back around its long-term average at the moment. So, that could have flow-on impacts to seeing some money flow back into the United States in a little while, but I don't think they're yet either.
No, no, definitely. But it is interesting to see, yeah, the Dow's sort of sitting, just over that long-term average. Same, S&P just a little bit over as well. You would probably expect that could see a bit of support. One of the big things that I would certainly be concerned about is US government bonds with the Middle East conflicts. A lot of money out of the Middle East has been flowing into US government bonds over the last couple of years, certainly in the last year or so, as part of some of the trade deal negotiations that Trump was able to force through. The Middle East was going to pump a lot of money. I think it was into the trillions into US government bonds. I think with countries, areas like Dubai, UAE, really, in a bit of a holding pattern at the moment, not sure what's going on with the conflict affecting them directly. I'd expect they may not be as comfortable, A, to keep pumping that money into the US, and B, with how much money they've got sitting in the US, while their own countries are probably seeing a really strong pullback in growth. So
Yeah.
be interested to see if that money starts to flow back out of US bonds, which I don't think Donald Trump will like.
Yeah, I know. I totally agree with that. The other thing I've been watching is projections on what the oil price might do, depending on how long the straits actually shut. And there was some great slides out from Bloomberg this morning. One
Yep.
showing the oil price stays above $100 if this strait stays shut for 2 or 3 months, which certainly will start to impact inflation and then interest rates thereafter.
Yep.
The chart on the right there shows oil volatility and S&P volatility. Oil volatility is probably the highest. It's sort of in that record territory of volatility for how much the oil price is jumping around at the moment. And
Yeah.
even the medium-term futures contracts implied volatility is huge. So that sort of says to me we're going to see this uncertainty for a little bit longer yet.
Yeah, it's certainly going to be interesting. And look, one of the things that I suppose you mentioned there is what flows out of this high oil price, and it'll be things like, obviously inflation starts to really kick up. Food inflation will be pretty hot, I imagine, especially with fertilizers and many farming products really being affected by this blockade and general oil price increase. So that's going to hit inflation pretty heavily. Petrol does hit inflation, so we are likely to see a real jump in our local inflation, which. Interesting enough, we've got the RBA meeting next week, and there was talk that she may. I thought they'd be on hold or maybe looking to lift again to slow things down, but I think this petrol price move was probably taking care of that. So now the view is probably steady or maybe even a cut. I think a cut would be a bit of a concern. It'd mean I think the government would be very nervous about things if the RBA was cutting. So I think maybe rates on hold. What do you think, Gav?
Yeah, I sort of tend all the big banks have come out and said they're going to rise it for sure, but I think the what you'll see is people will tighten the belts. I think they'll hold as well. If they
Yeah.
were to cut, it means they're seeing stuff that we're not seeing, and they see the economy really slowing down as a result of this. So I think you could see some big action on the markets if they did cut. But
Yeah, look, I think a
I
few of
think
the
they'll
major banks
hold.
have actually switched, Gav, to a
Is
cut.
that
I think a
really?
couple of them last week, yeah, did come out and
Mhm.
actually say that, which shocked me because I definitely thought we were going to see an increase in this meeting, and then they'd wait till the budget in May, to see where things went. So, but a few have actually come out and called for cuts. So
Right.
maybe some of the bank economists are seeing things that we're not seeing with the inflation trend.
Yeah, it's certainly a big market data point next week for us.
Yeah, definitely,
I thought,
definitely.
H, I'd did a little bit of research over the last few days on how to play the oil shock volatility. And obviously this depends on, what you already have in your portfolio and how heavily it's weighted to these things. But there's a few stocks you could look at. And obviously the energy ones stick out. So Santos and Woodside, if you
Yep.
didn't own them and you thought the oil price wasn't going to stay above $100, you could certainly look at that. If interest rates were to go up, you could look at insurance. AUB or QBE, they've got to hold huge reserves. They obviously will do a bit better if the interest rate goes up as well.
Yep.
Inflation-linked infrastructure, so toll roads, TCL, pipelines, APA. They also,
Yep.
whilst they have a lot of debt, it's long-term debt and it's usually hedged as well. So because they can
Yes.
lift their prices when inflation moves as well, they're pretty secure. And they're seen as a defensive play. The gold stocks, obviously, and if you're looking at something a little bit more speculative, you can probably look at a couple of stocks in the defensive space as well. But there's depending on your portfolio, it's probably a good time to have a chat to your broker about what your portfolio looks like, how well it's
Yep.
balanced. Most our clients would hold Woodies or Santos, I think, which has certainly cushioned a fair bit of the moves over the last few days. So I thought I'd put that together. Anything else you see there, H?
Yeah, look, I suppose a couple of things I've been watching is concerns about copper supply. So the shortage of copper is seen as a bit of a concern. So stocks like Rio, which has already had a really big run, likely to see probably strong support going forward with that copper price remaining strong. Iron ore's been pretty hot. I know there's a couple of concerns about some of the Chinese ports with what supply they want. So whether BHP can get its iron ore in the bulk amounts that maybe Rio and or Fortescue get at the moment. So, but certainly iron ore remains pretty firm at this stage, and many of those things will probably, change if this Iran situation drags out much longer. But I do think demand for commodities is still pretty firm. So, still like the resource sector on weakness.
Yeah, I tend to agree. And of course, if clients are really nervous and they want to take some risk out, they can always look to buy a put spread in the index itself. They use options as a risk management tool. They're a little bit expensive when you get this volatility, but it's always worth having a chat to your advisor and seeing whether that's an option that might be worthwhile for you.
Yeah, definitely. And look, I've had a couple of clients sell some covered calls over stocks recently. Some of the banks when they at pretty elevated levels. Obviously, we've got banking reporting coming out in May, but certainly some April calls may not be a bad idea to sell. And as you mentioned, high volatility is going to give more attractive option premiums. So, not a bad time to look at that.
Yeah. Well, I think that's it for this week.
Yeah, sounds good.
All right, good to talk to you again, and we'll catch up again next week.
Thanks, mate. Talk soon.
See ya.